Well, for more on Uber, let's bring in Hatem Diab from the LA. Hatem is a managing partner at Garber Kawasaki, a wealth and investment management firm. Welcome to the program. It's good to see you. Let's do the meat and potatoes first of all. We have to do this. What do you think of $45 a share?
It's on the lower end of pricing. I think it's a lot lower than they tried to, but it's still too expensive for me.
Right. Oh, right. Okay. And this presumably is Lyft, the Lyft effect, because Lyft, which is the smaller of these ride-hailing companies, listed in New York on March the 29th, and it's down 27%. That can't be good for Uber.
Correct. It's a tough market to go public in general this week because of the global stuff, but we've seen Lyft stumble and also went at a high valuation, so it's probably going to happen to Uber as well.
But you know, Hatem, this could all, I don't wish to be a Job's comforter, I really don't, but you know this could all go very badly wrong for Uber tomorrow, don't you? Because we've got these China trade talks going on. We think the tariffs are going to be imposed. The market's likely to be in the red all day long. Not a good day for an IPO.
Correct. They have strikes, they have global tension, they have tariffs. It's really, really tough day for IPO.
Do you think it was a major mistake of Uber to let Lyft go first? Because they could have gone sooner, and they let their competitor get into the public domain before them.
I think all these companies are waiting way too long, anyways. Lyft waited less than Uber. Uber has been around for 10 years now, and they have they're not growing as much. So for them to wait this long is already a mistake.
Right.
And now that we see the number, we see how much money they lose, and I think it's just going to be a disaster. Is
there any lesson that Uber can learn from what Lyft has shown them over the course of the last month or so?
Well, without getting too technical, one of the issues that Lyft has is they allowed some of their early investors to cash out, so the IPO hasn't worked out that well.
Right.
I think Uber is going to avoid that, and they're working with their investment bankers not to have that happen to them. But ultimately, I think it's the damage is already done. Now they're here, and they have to do it, and they have to see what the markets do.
Right. Now, I work for this program at the New York Stock Exchange pretty much every day, and people there on the floor say to me, when are these companies going to make money? Sooner or later, they have to make money, and it's beginning to be noticed by traders on Wall Street. I mean, this is the big issue, isn't it? When will Uber turn a profit?
John, that's one of our biggest questions, is the service itself. As much as I love ride sharing and the service itself, the offering is not profitable. They don't have a way of making money right now. So the more growth they have, actually, the more money they lose.
Yeah.
So that's really a question on the mouth of every investor out there, and especially when you go public. These questions need to be answered. When you're private, it's okay, you can get away with it.
Right. Where does the money go, do you think? Because they obviously rake in a lot of money, but how come they're not profitable?
Well, international expansion was a reason. They bought Careem in the Middle East. They're making acquisition. They spent a lot of money on their autonomous driving. They have a lot of waste, frankly. They've already raised $20 billion, and they're looking to raise another $9 billion. So everyone is asking, this is the most money that any company ever raised, and where's the $9 billion going to go? So yeah, that remains to be seen.
Well, let's just look at the last part of Karina Huber's report there, where she was talking about what Uber might do in the future, and she was saying that they want to basically do everything in transportation and a little bit beyond. I mean, what growth areas, once they become profitable, could they move into, do you think?
Well, if you go through their offering or their S1, you see that the most growth they have was in food delivery, Uber Eats.
Right.
I think that's really the most exciting. But even that area of the business, margins are low. They have a lot of competition from very well-funded companies. They also have a lot of VC money, and they're willing to lose money to gain market share. So I don't think that's very compelling long-term. Uber, at the end of the day, the most compelling story about Uber is autonomous driving, is the fact that they're going to change transportation. And frankly, I have a problem with that. We have a problem with that because If you think of autonomous driving and you think of a world where nobody owns cars, everyone is using scooters and bikes, and you got self-driving cars and trucks moving people and goods around. There is no more parking garages. They're all been turned into parks and green spaces. First of all, it's not going to happen tomorrow. It's
Right.
going to take a while to get there. And then two is you got Google with Waymo, you got GM with Cruise. You got some very, very well-capitalized competitors that are putting a lot of money in autonomous. Tesla also being another one, which has the most advanced self-driving technology with 500,000 cars on the road, who also wants to do a taxi service. So I think.
So in other words, if you think that Uber's going to change the world, buy the stock. If you think it's going to never make a profit, don't buy the stock. Simple as that, right?
Yeah, just be careful. Just be careful.
All right, Hatem Diab, thank you so much. We appreciate it. Thank you.